going on, guys? Edward here, back with another video. Thank you so much for being here again. And on this episode, I am going to do another alternative on an indicator from a YouTube channel, right? And this free alternative, like, I have to tell you that this gotta be the easiest one so far. Like, it was so easy to find this this replica, or you know, trying to replicate this indicator. It was so easy that it literally took me like less than 5 minutes on finding it, like, being honest. And I'm gonna explain you from the beginning what I did to spot it, to actually find a similar option and tweak it a bit to just get exactly what he has in here. Okay, now just right here, this is the actual channel. Okay, these are the actual videos. He always explains the indicator. Okay, he talks about the indicator all the time. He recently posted about 10 hours ago. Okay, so what we normally see, and he almost stays in the same thing, is that he always explained this on trending markets. Okay, if it's the first time you guys are watching this video, I do have a playlist. I'm gonna leave it here on the top right corner. I have a playlist of a lot of free alternative indicators that I have pretty much I don't want to say build, because I am not a developer. I did not build any indicator. What I do is I just look on TradingView for similar options and try to replicate the actual paid versions. That's basically what I do, and it's so simple that you can do it as well. And I will show you basically how you can do it just by watching a video from the actual developer, from the actual let's say in this case, this video, whatever video you're watching, you can actually sort of replicate these things. Okay, it's not hard at all. It's not hard. So you see that most of his videos, I would dare to say 99% of his videos, he always shows trending markets. Why is that? Because he knows that whatever indicator you have, whenever markets are ranging, they are lacking and they are useless when markets are ranging. The real deal will come when the actual, let's say, when the ranging market is ending, and now we're going into an uptrend or downtrend. They don't explain that. Okay, they just simply explain the trends, that you can actually follow the trends. And it sort of makes sense, because if you think about it, you know, if you're using this indicator, right, and you know prices touch maybe twice, the third time, maybe when the price comes back for the third time, maybe on the trend, you can go buying again, right? And you can literally go with the trend. It makes more sense, right? Instead of actually going on a consolidation. But he is always showing the actual trend. He doesn't show you the reality of the actual indicator and how it would look in a consolidation period, which markets tend to consolidate a lot, you know. So I'm gonna just go ahead and show you one thing. I just want you to listen to this video just for the first few seconds, just right there. Let me actually zoom in here so you can see. And let's see if I can put the microphone a little closer here so you can listen to him.
Alright guys, you see this volume indicator here, right? This green and red color band. Now in this video, I'm going to show you and explain to you why this indicator is the best, cleanest, most simple trading indicator that you've never heard of. Okay, so let's get into it, folks. My name is Mark at Dyno.
I feel you. All right. It's the best and cleanest. You're right. It's actually very clean and very, you know, very simple. But look how easy. I actually got it. I actually got it right here. And let me actually pull up the buy and sell signals. If you want to use this, yeah, I'm going to show you how to tweak them and how to change that. But basically, you can just simply use also the super trend indicator. In this particular case, you see that he is actually using the Heikin Ashi candles. So I'm not a fan. I always say this. I'm not a fan of the Heikin Ashi candles, even though they help you stay on the trend for longer. You know, they help you reduce the noise, you know, on markets, but it doesn't show the real price, the actual real price. Okay, so just be careful. I can see that I don't know if you see it here on the image, but it looks like there is a buy signal, right? And there is a sell signal right there. So the indicator is sort of giving those things, those changes, right? When the market is bearish or bullish. I'll show you what we can do to actually get that. But if you look just at the moving average like that, I actually got it right here. And you see that the market simply, when it stays below, we sell. When it goes up, we buy. When it goes below, we sell, we buy, right? That's basically, this is basically the indicator. You see, it normally shows the actual trends, but it doesn't go, right, like showing like this, the reality of the consolidations. The markets are ranging. If you get a false signal right there, you sell, but all of a sudden price comes back up. It's not explaining that and not telling you that, right? When there is a trend, a huge drop, of course, makes a lot of sense, right? You can actually catch some really nice drops right there. But what about this moves? You know, what about even this trend right here? Yeah, it was pushing up, but you see sort of it went on a downtrend for a little bit, then broke, and you go buy. Okay, so you have to explain, and of course they don't explain that, because their idea is to, of course, to offer the actual indicator, but it's always good to have support and resistance, you know, and you know price is pushing up, pulling back, let the price to pull back. Once the price starts climbing back on top of the actual little cloud or moving average, you go buying, and the stop loss below the swing low, and you go for it, you know. Maybe you start actually taking partial profits once you start changing coming back below the moving average. All right, I'm gonna show you where you can get it and how I actually got this before I go on and here on indicators on how you can get it. Let me show you what I did to actually find this. I just literally went on YouTube and I just type in trend indicators, just like that. I went on trend indicators. The first couple of things that I was watching right here, this actually are short videos, right? And look at this. This is already showing me a very similar indicator right there that he is using, right? So I just literally clicked on that.
Here are two trading indicators that are 10 times more.
I'm gonna mute this thing for a second, because all I want to see is what is the name of the indicator he is using. All right, so I stopped the video. Huel Suite. All right, I went on Trading View and I type in Huel. That's all I want to see. Huel Suite. This is the one. This is the actual creator. Boom, you add it, and there you have it. Tweak it. You can go on settings right here. You see, I'm currently using the 50. Okay, you can change it, customize that. Let's say 200. Right. Okay. Now I have the 200. Okay. So the 200 is a much stronger trend, you know. So when it starts to climb above, you know, it means buying, right? When it's going below, it's a nice downtrend right there. But you see, it's basically that. What you're doing is you're buying and selling. You can literally use even a simple moving average, because that's what it is. This is just a fancy line right there. If you want to have the same moving average that he's using, that same little cloud right there is literally almost the same, you know. So I believe he is using the 50. You can tweak it a little bit. You can tweak it around, okay, so you can actually find the actual entries. For example, right here in this consolidation that I spotted, look at this. This is beautiful right here. This is beautiful because look, literally the market gave you see how nice it was trending up, then trending down and trending up. Literally, if you wanted to get in here, for example, let's say you want to buy, you want to go long somewhere there, boom, you go long, stop below the swing low and take profit once you start to see the market, maybe the candles you know, starting to go lower, right? So that's it, that's your exit. But then you decide to go short, right? Because now you're seeing the sell signal. You place the stop loss above the swing high and you go for the sale. Now the sale is going to last until you start seeing the crossover. Maybe the body of the candle start crossing over above, right? And that's your sign for you to get out. Okay, not just that, now you're getting a buy signal right? Somewhere, since that is crossing above, that's your sign for you to buy. Stop loss below the swing low, take profit. You go and you wait maybe for the price to cross over, which is starting to cross over right there. So it wouldn't be cool, you know, if you can actually catch all those moves all the time, right? So with this indicator as well, this is called, let me show you how you can find it. It's actually right here. Trader XO Macro Trend Scanner, okay? This is the creator, all right? Once you have it, you're gonna tweak it a little bit. You're gonna change. You can play around also with this. The way I have it, the closest I have it on his indicator is the number 5 and number 10. Okay, so those are the ones that I currently have, right? And that's basically it. If you want to change the color, it comes with all these lines. It comes with these lines like that, and also comes with this. Alright, so those lines, you don't need them because he doesn't have those lines on the chart, so you can hide it. I'm gonna hide it. I'm gonna go on style. I'm gonna hide this one, and this one. Alright, and that is basically it. I only need the bearish, which is the sell signal, and the bullish, which is the buy signal. That's all I need. Okay, so I'm gonna click OK, and you see the indicator is actually even better right now because every time it's above, the candles are one single color. Even though I'm still using the Heikin-Ashi candles, they're a single color. And when it's bearish, you know, everything shifted to bearish. You see, you have black candles right there all the way to the downside. And now in this case, if you want to get out of the trade, what you can do is you wait for the next candle to show you the bullish. Like if you enter here, for example, if you enter here, right, on the sell, boom, your stop loss is just right there. And your take profit, maybe that one, right, as soon as you get the buy signal, right? And if you're getting a buy signal, guess what? You can actually go for the buy, right? It's not all the time, guys. What I'm telling you right here is true, honestly. It is not all the time, all right? It was this scenario right here that the market was nicely bullish and bearish. You know, it was having nice trends, you know, and this is on a 1 hour time frame. NCD USD tends to have a nice trends, right, for short period of times. So you can actually take those. You see, well, so when it's selling, the indicator is giving me the sell. When it's buying, it's giving me the buy. You see, it's selling right there. Not just, let me hide the scanner. Not just you're getting the sell right there with his indicator, right? But now with the trend scanner right there, you are actually getting the signal. So it's giving you the signal. Bearish means sell. Bullish, buy. Bearish, sell. Bullish, buy. Right? So it's literally helping you. If you don't know if you get in, you see it's helping you right there. Let's see how this looks maybe with the normal candles, you know, and not the actual Heikin-Ashi candles. So it's almost the same, you know. Price is breaking below. When it stays above, normally it stays on one single color. You can put the color you want. I have it on yellow and black when it's downtrending. So you get a sell signal right there, right? And then you place a stop loss maybe above that swing high, and you hold this thing until you start seeing maybe the first crossover right there, or the first bullish signal, which is right there, 1 to 5. Right? But be careful, as I mentioned, because it's not always going to be like that. Sometimes you're going to get a buy right there, right? In this case, it did bought from there, but you see, you get it, the market consolidated for a little bit. Okay, that's the reality. Markets are going to be ranging. That's the reality. He's not explaining, he's not talking about this reality on ranging markets. He's only showing the trend lines, which is the easiest thing, right? Makes sense. Now, what you can do in this thing, if you want to continue with the sales, use price action, guys. Use price action and maybe wait for a break of the structure. Like, for example, we know that, okay, price is going down, a little correction, dropping, little correction, dropping, little correction. So let's say, you know, right there, price created that support, pushed up, and then broke. So on that break, you're not getting another signal. Okay, this indicator is not giving, it's not going to be giving you a lot of signals to go selling. No, it's changing, it's giving you the signal once it broke right there and it's changing, right? Which is the cool thing about this, you're not getting that many signals. So your entry in this case, if you know price action, there's a break of a structure right there happening. That candle closed below, so you can place a stop loss above right there, and maybe you can go for that 1 to 2. That way you follow the trend, you know, you are in favor. It makes sense to continue go selling, but you have to see a break of a structure, price action, okay? Not just trusting 100% on the indicator, okay? When markets are ranging like that and you see the moving average is not going anywhere, the price is just up and down, up and down, up and down. Maybe is, I don't know, the session that you're in is not good. Maybe it's Asian session, or depending on the pair that you are trading, you know, is it's consolidating during New York, but it has a lot more movement during Asian session, you know. So depending on what you have, you see nice selling right there, boom, nice buy right there when it pushed up. But you see you got also a buy right there, but something happened, price continue actually dropping. There is a support, right? You have to mark that up, guys. You have to understand sometimes the reason why price could fail is because there was a support right there, price went up, retest before actually continue dropping. So it's not always going to be nice. I can guarantee you, you're not going to be winning all the time. You see markets tend to range, okay? They tend to range, to consolidate, moving sideways, okay? Now, when can you trade it? When you see a nice break, aggressive momentum, you know, sort of on a breakout, you know the price could potentially be going on an uptrend, okay? So please, guys, understand that, back test, use this, you know, this alternative, this real alternative, and very simple to find, and make sure to tweak it the way I have it, so it's actually very close to the way he is using it. All right, make sure to watch his videos also to understand, but he's basically trading the trends, okay? He's always explaining the actual trends. How you can find the indicators, I mentioned, it only takes a few seconds. You know how fast you type in, that literally is what it takes. I just typed in trend indicators. I'm looking for the image I want. I don't want this is another trend indicator, another trend. No, that's not what I was looking for. I'm looking for the similar image. So this video from this YouTuber right there pretty much told me what indicator to use. So I literally did not build any of these indicators. I did not build them. I am not a developer. All I did was put things together that already exist within TradingView. So I hope it makes sense, guys. I'm not hating on any traders or any YouTube channel, not hating. It's just that, hey, try to definitely help out the community by explaining and being very transparent on things, and just show all scenarios, not just trend scenarios. Try to also get people out of doubt, you know. So it's up to you. You want to use the normal candles, you want to use the Hakinashi, which is the one he's using, fine, cool. And very important, sometimes it's really good to just watch price action, watch your candles move, and when you think the market is giving you something, when you think, for example, there is a trend, right? There is a trend right here. You don't need an indicator for that. You can just do it yourself. You mark up the trend and you start to see a breakout. Oh, that's the moment for you to use an indicator and see if you can actually get in. You see, the break happened. The signal is giving you a little early, but the break is actually happening right there. Okay, then maybe you can actually take the entry right there. Once that candle closes, stop loss above the high, take profit 1 to 2, don't go too far or crazy. If you want to hold, as I mentioned, just make sure maybe at some point 1 to 1 risk to reward. If the price is going your direction and you're already 1 to 1, move your stops to break even, take partial profits, and hold this thing maybe until you see the first bullish sign right there. So that's basically it. That's how you can use it. Okay, let me know what you think. Leave your comments below if you happen to know about another indicator you want me to check out. But this is how simple you can actually do it yourself as well, guys. You can just literally go on YouTube, and I guarantee you almost all indicators that you're going to see out there, they are trend indicators. They work best when markets are trending. When markets are consolidating, none. I also want to answer, by the way, a question that somebody asked me on YouTube as well, that if I can come up with a strategy which is good for consolidations, or when when to know when the price is gonna break to the upside or to the downside. There is none. Like, this one could literally work, but all you have to do is just mark your structure, mark your support and resistance, and just simply wait for the break to the upside, right? In this case, it looks like there was a little manipulation right here. This is called inducement or liquidity sweep. Market is inducing buyers. You see it went up for a little bit, sweeping this highs liquidity. Stop losses are above this high right there. Price was pretty much liquidating all these people, even inducing buyers, thinking that, oh, okay, there's a break right there, so I'm gonna go ahead and I'm gonna get in. I'm gonna place my stop loss below my take profit, let's say 1 to 2, right? So price pushed up but then failed, right? In reality, market was actually going to drop instead of moving to the upside. So be careful. When markets are consolidating, is because they are building liquidity. They're letting beginner traders start placing their positions on the resistance, you know, looking for sell on the resistance and looking for buys on the support, and they will eventually get stopped out. So these are stop losses above, stop losses below, and at some point there might actually be getting stopped out. But how do we know? We don't know. So we actually don't know if it's in fact going to be breaking or continuing to the upside or to the downside. You see that in this particular case, it gave you a buy signal, price broke above, but then in reality, the manipulation, you know, was happening, and in reality, the price was going to drop. It gave you a sell there. But would you trust on going on a sell after it giving you the buy? Let's say you did get in here, right? You got in there, you placed the stop loss, and this is your take profit. But it turns out all of a sudden price gives you a sell signal and is starting to break inside the consolidation channel. What would you do right here? Would you close your sell, your buy, and would you enter on a sell? What would you do? You know? So sometimes it takes a human. It does take a human to make the final decision. No matter what indicator you're using, it's your decision at the end of the day that's going to make the difference. Where are we? Are we bearish? Are we bullish in overall? We are bearish in overall. If you look at, you see previously right here, it makes more sense to go selling than go buying. You know, so going into this buy, even if the indicator is giving me the buy, use common sense. I am bearish. You see, price is coming to the downside right here, starting to break structures, broke a structure, broke a structure, broke a structure. See, broke a structure is going to the downside, and this buy right there was literally just an inducement. You know, price was actually inducing. Most likely, I also trade smart money concept. It was most likely a little sweep right there. Market was sweeping, maybe mitigating an order block. There was somewhere here, maybe a supply zone, right before actually dropped and took down this low. So that was a nice bearish flag also, by the way. So market was bearish in overall. You could use, let's say in this case, I'm using the 50, right? This is the 50 that we're using. You can maybe include the SMA, simple moving average. This one right here, simple moving averages. I clicked on the wrong, right there. So once you add that, you can actually put the 200, and you see that market is sort of starting to go bearish. You know, we're actually starting to go bearish. We are below the 200 SMA. Okay, so it's just a matter of knowing where the price is going. Okay, at least not too far ago, we'll see that market is actually trending to the downside. So this buy perhaps didn't make sense. What makes more sense is actually take the risk on the sales. All right, of course, trying to avoid those consolidation things. So I hope it makes sense, guys. Sorry for taking too much in this video, but I wanted to let a few things clear. and I hope it makes sense. Let me know what you think. Give it a big thumbs up. It motivates me to keep posting videos for you guys like this. Subscribe if you're new on the channel, and let me know in the comment section if you want to see another indicator maybe, and I can check it out. All right, see you guys later. Take it easy.